Oh.
What's going on? What's going on? What's going on? Welcome to another Tuesday night at 9. We got Prototype Dad. What's going on, fellas? We got the original cast. We got Leafer, Hit Me, Mo Better, and our special guest today is Phil Hall. We're going to talk a little bit about these taxes now that everybody's about to get these W-2s up and going. So go ahead and let's start the show. Hey Phil, I want to thank you again for coming on, man. Like I was saying, you guys are pretty hard to find. It's like the CPA and like people that are CPAs just aren't out there, or like it's a dying field. So go ahead. I mean, you was explaining a little bit about the industry. Go ahead and tell me about like what the manpower is like. If people are is that something people still getting into? Uh, like how is the industry working with that?
Yeah, I can't.
Vic, that's you. You muted. All right. Well, I think we can hear you now, Phil. You might need some headphones.
Hey Phil, can you hear me?
Hold on.
So nobody can hear, or Reese can hear?
Yeah, we can hear you. I think Phil can't hear us.
I can hear y'all. I can hear everybody.
We was just talking.
Oh yeah, I didn't hear nothing y'all said then. But I can hear Phil, but maybe you can't hear us. So what's going on, fellas? Let Phil get
What's going on?
situated. Hey, can you hear
I
now?
can hear you. Yeah, I can hear you now. Yeah.
So no, I was just you was just explaining like why the manpower isn't like CPAs are hard to find. You were telling me about people are going back into the private industry, or elaborate on that. Like, is that something that people should be looking to get into? Is it a field that people should like aspire to get their CPA or whatever, or become that?
So usually, from how I was told when I was coming up to do accounting, obviously you want to do like public accounting because any type of experience you can learn, you're going to learn it from obviously accounting firms. And there was always, the safe bet is always to get a job with an accounting firm. But it seemed like just from the people I know and just from the, different friends I've worked with over the years, they've chosen to go private because, ever since like COVID, some of the hours and the demand has been tough on a lot of people, especially those with families, and different things of that nature. And just you've noticed like people just don't want to do certain things anymore. They just don't want to do the certain demands anymore. Whether that's I don't know certain reasons for it, but they just don't want to, do the demands for it anymore.
No, I think so. Is it like a stressful job, or is it like is it like how would you say that
I mean, for right now for me, we're gonna be entering like our busiest part of the season, like our tax season. So it's gonna be from January to April. And depending on certain workloads, certain work, different firms you work at, it could be, maybe you might have to work another busy season, maybe sometime in like Labor Day weekend. Maybe you may not have to, but again, sometimes your busy season hours could be anywhere from minimum like say 50 to 60 hours a week, or it could go higher to like 80 to 90 hours a week. It
Mhm.
just depends on, what type of work you have, what type of clients you're dealing with, how big the staff of different people you work with are. It just depends on maybe the experience of the people you work with too, things of that.
Okay. So this is the kind of conversation that I have with these guys year in year out. Every time
Hmm.
these W-2s come around, and
Hmm.
I thought it would be a good conversation to kind of put on the pod. That we all have like LLCs, and we try to all get around different things, like as far as saving our receipts. Like we hear the typical things like, oh, save your receipts through the year, and do these different things.
Right.
Saving receipts never benefited me because it's like, oh, you only need them if they audit you.
Right.
But I haven't been audited, so I'm like, why am I keeping tab of all these receipts? If it's just a waste of time for real. So
The quick question, like, do you have like a bookkeeping system? Like, do you use like QuickBooks or something like that to keep track of like your expenses or anything like that?
I don't, but Mo, I think Mo better. I think he does.
Okay.
I just mentioned it last week,
Yeah,
and
he mentioned it last week.
Phil, for the group, I've been audited. Keep your receipts.
Yeah, I was just about to say you want to keep it at least like anywhere between, I'd say, like, I think it's like 3 to 7 years or something like that. You want to keep your receipts just in case. I mean, when you say like you've never been audited, you never know. You might run across that one time they're gonna pick you out, and it could be some for some odd weird reason. Like they could say, all right, you live in this neighborhood, certain refunds are high and yours is not, or your expense for this is high, or certain things are in job, and we just want to check to make sure you're legit. That's all.
Mm. So
They
I mean,
have. Go ahead. Sorry.
how I guess you just never know if you're going to get picked, or there's some type of system on how they pick you.
There's just a system how they pick you. Depending on the staff. If they feed you returns, they'll be like, all right, they could just be, your expenses seem a little suspect. Let's kind of go over and see why you know you have this when the industry you work in doesn't generate these type of expenses, or they don't generate these type of low expenses.
Is there a dollar amount that I should like kind of stay under to stay under the radar, or like it just doesn't matter?
It just doesn't matter. It just depends on what you do. Like, I don't know what type of business you do, but it all depends on what you do.
Okay. So I guess the first question would be how will we best prepare? What are some things we should keep? Okay, keep the receipts, but what are some things we should be doing throughout the year to make sure we're ready to for tax season? And even still, how should we set um, our taxes up? I heard somebody say the best possible situation is to not have a refund at all.
Oh, yes and no. I mean, everybody always wants to have a refund because at the end of the year, you don't want to really be paying taxes when you don't really have to. If you could try to avoid that as best as possible. One thing is, for your business, I mean, obviously you would have like a bank statement, keep bank records and receipts of what you're doing. Do you have like credit cards or credit card statements, things like that?
Yeah, yeah, yeah.
Okay, so definitely keep track of your credit card expenses throughout the year. Um, I wouldn't say do it daily, but definitely do like a weekly or monthly, like kind of like an activity report to see where you stand. Each time, where the company stands, just to see how things are going along. Um, Maybe do something like each quarter, like every 3, 6, 9 months, or 12 months, just to see how you're performing during the year, and kind of see how you stand. Sometimes or another, it's good to know halfway through the year where businesses stand, because that way you could get a better feel and say like, all right, halfway through the year, maybe your income is up because you're being more productive, your company's more productive than what you're used to. Let's try to do some tax planning. Maybe you might have to pay what they call like estimate taxes. Maybe you might have to say, all right, maybe there's a way to get my income down. Maybe I might have to purchase a few things. to save me a little bit on taxes, so that way I don't have to write as much. Maybe through my business, I could put away some money towards a retirement plan or something like that. That way, you know, I'm able to, reap benefits. Yes, I'm keeping my income down, but also I'm able to put more money away as I keep my income down. There's tons of different ways. It just depends on how you want to approach it.
So, are you saying we should like is a CPA something we should like look to hire for personal use or for our business or whatnot?
Oh, you could do it for both, actually. I mean, if you just have like a W-2, you don't really need like an accountant. If you just talk to someone, they can walk you through like different taxes and what you do. But if you have like a LLC, like a business, you could go through an accountant, or you could go through someone who does like bookkeeping services, and they could give you the proper advice to say, hey, look, I could do this, bookkeeping for you throughout the year. We could, I could manage your books and records for you daily or weekly or monthly or however much, however you need it. And we could, get the ball moving and help you along those ways.
I think that's pretty dope. I think one of the things that is going to be a common theme for me on this show is don't be like Mo. Um, because literally, I mean, I have probably 4 to 5 CPAs in my network. I'm actually engaged to one right now.
Okay.
And one of the things that's like in my mind, I was always asking these types of questions because I was trying to game the system.
Hmm.
And essentially, what ended up happening was it like literally, actually, I knew one that was a 30-year IRS employee, and in my head, all she said was anything under $1,000, they'll never audit you for.
Right.
That wasn't the entire message, but that's all I heard.
Yeah.
So literally, so I'm going through life for years doing that type of thing. Anything $1,000 or under, oh, I'll never get audited for. It won't be an issue. And for a property that I had actually sold previously, they came back and audited me. It was like 2 years later because they can go 2 years in arrears.
Hmm.
And literally, I didn't have this stuff anymore. Once I sold the property, I got rid of everything. And it was something as small as I didn't sign something. And they were looking for, hey, we need this. I didn't have it. Cost me 10 grand out of my pocket.
Oh man. Yeah.
It,
Sometimes.
so
Oh god.
yeah, so I mean, so to your point, Phil, man, like hopefully people take what you're saying for face value and not the spirit of the law and oh, we'll take this and try to game it. Because even above and beyond that, I've done the same thing on because not only do I do that on the side, but in my career with a W-2 side, I've done the same thing. Oh
Yeah.
well, from January to March, you can go exempt, and I forgot to turn it back on.
Hmm.
That was another 10 grand.
Man. I would also say too, definitely when I say like keep receipts, when we mentioned keeping receipts, if you could like keep a digital trail, like maybe sign into like Adobe, not sign, sorry, scan like your documents into Adobe, keep all your records on like a flash drive or whatever, like not just like the documents for like the returns, but the backups to it, like the numbers of how you got to those returns. I mean, granted, it might be too much paperwork, but obviously every bit counts.
So, what are some things that we should like look into as far as like little sneaky deductions that we can like kind of take advantage of?
Well, like I mentioned before, like the pension plans, depending on what type of the company you guys have, you can look up to set up a pension plan. I don't know if you have employees or whatever, but if you're like self-employed, you can definitely do like a pension plan. That will help, reduce your costs and income a lot. Um, I would say probably look into hmm, probably look into different states because like different states have different rules on how you can cut incomes too. Um, look into probably doing like some estimate payments because that could help help you guys out at the end of the year, save taxes as far as maybe you may not be able to pay in your full tax amount during the year. If I at least paying some during the course of the year, I won't owe a hefty tax burden at the end of the year. You could do that. um, it all depends on the situations of what your company is doing and what you possibly could be looking to do.
So, would you say the less you make, the better?
I mean, you never want to make less, but yeah, I mean, for the most part, yeah. But obviously, if you make more, just certain things you could always look into just to gain a lot more.
I guess I could say the less you make to them is
Right. Yeah. Correct.
you know what I'm saying. So if you make 100, you want to show them you make 50.
Correct. If you can, yeah. So if you
Yeah,
make
if you can.
if you make 100, that's when you'd be like, all right, I paid, I paid like a subcontractor to do this work. I paid this guy to do this work. I paid legal fees. I paid filing fees. I paid all these other fees, or I might have paid a guy for, I had to buy some new equipment, new computers or something like that.
Are these things that I have to have an LLC to kind of take advantage of, or?
It would help, yeah, because that way you could say, all right, if I bought, for your business, you say, all right, I bought new equipment, I bought new furniture, I bought new certain things. I want to be not just write it off, but you can say, all right, I want to take a deduction on it. Maybe also too, depending on what type of business you have, you can look into like car leases and certain type of car notes, and you could write off the lease payments through the business, like some
So
auto expense. Oh god,
how people buying these G wagons? What's
yeah,
going on with that?
yeah. See that's a little too pricey. I mean, you don't want to be doing something like that because that could lead you to get audited a little bit. I mean, I always play it safe. Not saying that you can't do it, but I tend to try to play it safe. Like
But
if you,
I've been
okay,
hearing that that's a social media thing all the
that's so.
time.
I wouldn't risk it. It's just a way for them to just audit you. They could be doing it completely right, but it just raises the biggest red flags because they'll be like, well, what the hell are you driving this type of car? What type of business are you doing?
Right. So is there more to just the weight to write it off?
Yeah, so if you bought a car, you said, all right, I need this to for my business. I'm a traveling salesman. I have to travel across state lines. You might not be able to write the full for the period of the loan or whatnot. You can write off the full value of the car. Um, so that sort of thing can help.
Because, like I said, everybody's buying and they'll say you could buy a G wagon because it weighs what 6,000 pounds or something like that, and because it weighs 6,000 pounds, it's a tax write off.
Right.
And
Because
I don't understand.
They saying it's commercial.
yeah, because it's under. I was about to say, yeah, I was about to say it's under a certain way. I think it's under like 12,000 pounds or something like that.
Mm.
I still wouldn't risk it. That's just me. Like, I mean, there's dudes. I mean, it's like I know people. I've seen them. Maybe write off Tesla payments or like Porsche payments, but they use it. They prove it. They use the travel for business. When they go to certain clients or go to certain meetings, or maybe if it's a lawyer, he's going to certain court appointed appointments. They can prove that type of stuff.
So I always had in mind a girl could write off like plastic surgery if she's a like waitress. Is that true?
She's like I mean, she's a subcontractor, maybe, but I doubt it.
That's I mean I've seen that somewhere too. Like you can write off a fresh pair of boobies.
You could. I mean, listen. I mean, not to be rude, but exotic dancers, right? Or even adult actresses. If they're subcontractors, that's part of their job, right? Their appearance, their work appearance. So, I
So
mean, it's.
it does it work for like in like a exotic dancer as well, or does it work for like a waitress?
I mean, no, it won't. It won't work for waitress. I'm just saying, like, for people who are in that line of business,
Yeah,
it could
yeah,
it could work. It could work for them to say, hey, look,
Shoe models.
yeah, exactly. You can say it. I mean, you could just say, hey, look. I mean, this is part of my materials, my work materials, my work attire. I need this,
Here,
so
write it off.
write it off.
My productivity went up 69%.
I mean, they can't. I mean, it's true. It's like if you're subcontracted do work, that's some of the. I mean, you had to pay money to get enhancers and features like that. Hey, you should be able to write that off. So I would say yes.
And there's always some wiggle room, right?
hmm No, there is. There definitely is. There definitely is.
So, what should be like? How should I go about like planning how I want to what should be the goal for my taxes every year? Would it just to be have a refund, or you know what I mean, or like I said, would it be to get the zero, or like what would be the goal? You know, to kind of stay out the way, and you know what I'm saying, it was just stay up and up. Like, what would you advise?
So what I would say
How can I
is,
keep as much money as possible?
yeah, so definitely for me, because I know even though I do accounting, but I fall into this habit myself. But obviously the main thing is to be fiscally responsible. Like during the year, if you can, just kind of check to see, all right, what your deductions are doing during the year. If there's a way you could check to say, all right, so from last year, check your tax return to say, all right, I paid this much in taxes. Know that during the year, I have to cover at least 100% or maybe higher for next year's taxes so I don't get penalized. And just say, all right, if I covered that basic amount, I'll be fine. Now, obviously, if certain incomes, if you get more or less income, that could drastically affect that. But you just want to kind of keep a track, like I said, with the business, like the quarterly thing. If you can find a way to kind of keep a track personally, quarterly throughout the year on how things are going on, that would help you guys out a lot.
So, I actually been thinking about getting some dental work, right? So, can I? Is that something I can write off? Like, is a medical expense?
If you're able to itemize, you might be able to, yeah. Because
So,
any like doctors, dentist payments, if you're able to itemize, you should be able to write it off. I
so
don't
medical
know.
expenses go in that bucket of things I could like, kind of like, hey, I paid these medical expenses, whatever.
Might be able to, yeah. If you're able to itemize, that's the only thing.
What you mean? What you
Yeah,
mean
that's
by
what I was
that?
going to ask. And that's what I
So
was going to ask, Phil, because with the standard deduction being elevated now, I
yeah.
haven't been able to itemize anymore, and that's how I ended up with that $10,000 to $20,000 that I had to pay out of pocket.
Because
So
it
how do
used
we get to that threshold?
because the thing I would say, it used to be right before like the whatever the Trump laws changed, how the old standard used to be if you obviously own the home, but if you paid a lot in real estate taxes or mortgage interest, that's the clear way of telling you be able to itemize. But now, being that there's a cap on real estate taxes, unless you're paying like a high percentage in like mortgage interest, it's very hard to get over that threshold to be, to itemize. The only way is if you contribute a lot of money, if you donate a lot of money, if you have like odd like weird contributions. I think in the next couple of years they're bringing back the old real estate tax rule, but I'm not 100% certain on that.
So you mean if I'm paying a high amount of interest, let's say I got bad credit and bought a house,
Right.
right? I can
hmm
write I can write that off. What or at what percent could I write it off?
For your new house.
Yeah, if I bought a new house, but let's say I have bad credit, right? So I got a terrible rate on my house.
So dependent, like say if let's just say if you bought the house for like under, we'll just say under 750, because if you go over a million, the interest limit gets limited. So depending on how much you paid as far as the interest, the mortgage, was it the mortgage points, the interest points and all that, it all, you'll be able to write that off. Not so much the purchase of the house, but you'll be able to write that off. And
I,
different taxes, obviously the real estate property taxes paid throughout the year.
so
You'll
it
be
doesn't matter what my interest rate is if I can write it off. Is that what you're
you,
saying?
yeah, you can write it off.
So I can go into a bad deal, get any house I want,
You
and be
can
like,
write
all right, whatever the interest is, bang, I'm
ri-
writing it off.
right. So whatever, obviously that mortgage payment you make, however much you spent in interest that year, you'll be able to write that off.
Oh, that's dope.
Yeah,
Mo,
you'll
you
be
know
able.
that being in real estate.
Yeah, I do, but I mean, you got to buy a lot of house to get
Yeah,
to that
that's what.
threshold, though.
Yeah,
You know what I
yeah,
mean? So you got to buy
yeah.
a lot of house.
What you mean? What's the threshold? What do you mean by that?
So
I say
like
you said 750. I was like, that's a big number, right? So like,
So like no, well, I was saying like I mean, Mo can correct me, but like what the threshold is, so the standard I think this year has gone up to like 14 or 15,000. And it used to be like, oh, I'm sorry, if you're single. For married, I forget, I don't have it in front of me, but
it's
it's up a lot.
double,
It's double that.
right? So
But
it's 30,000 and whatever.
right.
So I got to
So
right,
itemize thirty
you got
thousand dollars.
yeah, you got to come up with over 30 grand, and like
And
I mean,
interest. You know what I
yeah,
mean? Like,
interest. Yeah,
And interest
you
alone.
would have to own like a big mansion pretty much for you to get that huge interest payment, or live in a state that has, like where I'm at, that has ridiculous property tax interest rates.
Yeah. Oh, that's crazy.
Yeah,
So it's not a, so I can't like itemize my dental stuff and then in my therapy stuff and then itemize the house. Does that count to the threshold? Is there one threshold I'm trying to get to with everything I have?
yeah. And so if you say to yourself, all right, if it's 30,000, you have to say, all right, I have to spend so much just to get to that, just to get to this point. And like I said, if there wasn't a cap on real estate taxes, it was easier for a lot of people, but that ain't the case anymore. Because what they did was, the reason why it's so higher is there used to be exemptions people used to get, but they added that back into like the standard deduction. So they're trying to say, all right, they're trying to make it a lot easier for people to take the standard.
Mm. So 30,000 is the mark at this point.
For
Or
yeah,
if you're married, fifteen
right,
thousand if you're not.
right.
No, that's solid. I didn't know that. Lee, for you about to say something?
Yeah, I was. So I noticed because I've been audited like 3 times. So you know what I mean. I noticed that like whenever they see like a shift in anything that you're filing, like if it's not like something consistent, because they be monitoring that stuff
Yeah.
every single year, and they see how it changes from year to year. So if there's like a huge shift or a huge change, man, they
Keep
are
that.
auditing your behind. You know
Yup.
what I mean? So you got to keep all your man. I got records back to the 90s, and I don't even need them, but I be scared. Like my CPA be telling me you only need them for 7 years. I'm like, yeah,
But
I ain't
nah.
playing with y'all.
So true story. Not gonna lie. So a job I was working at, they had, I forget, I don't know the client because I never worked on it, but my boss told me this some company got audited, and I forget the reason why, but they went back almost 20, 30, almost like 40 years to find paperwork, and they couldn't prove all of it because they didn't have all the paperwork, but they wanted to go back so long just to see, I forget what the problem was, but they were going back so far just to see, whatever expenses he had, to make sure it was legit. So you do want to, you only want to keep it for 3 to 7 years, but if you can keep it longer, keep it longer. Maybe it's not as far as paperwork, but if you could like save your information on a digital drive or something like that, that would be, a tremendous help for you guys.
Yeah, no, I definitely worry about it a lot. Like, so would you say like TurboTax or like a CPA? Like, what way should we even go about filing, or should we do it like just learn it and do it ourselves? Is this something we should learn ourselves?
I would say definitely go through an account, depending on what you do. Like TurboTax, I would only use TurboTax if I'm like I said, if I'm only doing like a W-2, if I have like the simplest of simple returns, it could guide me a lot, and I know I could just get through it. I know what questions to answer. That's what I would use TurboTax for. But if I'm having like a growing business and I'm growing, I would kind of want that professional around to help me, grow a lot better.
I don't have a growing business. I have a side business,
Hmm.
right? So like so I'm in IT. I do like websites and stuff on the side, right?
Yeah.
Um, so the money I get from that, I use that to write off a bunch of stuff. But
Right.
I'm always skeptical about getting a CPA because I'm like, you're going to take more than I'm really, you know what I mean? Because if I get I rather the 8,000 I'm gonna get through TurboTax, you know what I'm saying? And if I go through a CPA, like how much more am I going to get?
So it all like I would assume, like a lot of firms do. I don't, I'm not sure. I can't speak for all of them, but they're just gonna base their fee off of, obviously how much the income you guys generate. No one's not gonna really take you for a lot, but I would imagine like a standard like business return, someone like your size shouldn't cost that much. I mean, it shouldn't be like no more than, I don't want to give you an exact price, but I
Yeah,
would say
yeah, yeah.
like, but like no more than like I almost say like 1,000 or 2,000. It could be wrong, but it shouldn't be that high.
Got you. So if they're like saying like give me 1,500, I might want to look somewhere else. There's probably somewhere cheaper.
Well, if that's the case, if they did that, you might just be like, all right, what does this include? Does this include you doing my personal return? Does this include you, keeping tabs on my business on a monthly basis? Does this include maybe say you filing some like, some other tax forms or different forms that I'm not aware of? Those type of things are just going to be brought up when depending on what the fee covers.
Got you. So like if it's regular tax return,
Hmm.
how much should I be looking to? What's the ballpark where I could keep it fair and I'm not getting hosed?
Hopefully, no more. If you or say if your profit's like 8, and then you hopefully no more than like definitely no more than like 1,000. I would say not even. I could be, and again, I could be wrong depending on who you use, but I would say definitely no more than 1,000.
So 1,000. So if I'm getting 8, 1,000. So if let's say I'm getting 8, right, and I go through the TurboTax
Hmm.
and it says, oh, I'm getting 8 back.
Hmm.
Should I second guess it and get it and go through a CPA? Just should they be able to get me more than a TurboTax always?
Oh, in theory they should, but there might be something that it works both streets. It could be something that you almost that maybe a TurboTax would know. There might be something that an accountant, a bookkeeper may or may not know. It just all depends on who you use and what they know in those certain industries.
And something I wanted to clarify, I mean, if you pay for the premium TurboTax, you can have access to a CPA through them too. So I
Like,
mean,
is it through like an online chat or whatever or no?
you can actually do virtual. I
Okay,
mean, so yeah, so I mean, they still have access to the expertise of a CPA because, like I said, some of the ones I know have actually contracted through them. So I mean, and they also do books outside of that too. So
right.
you do have their expertise, but that doesn't mean that all of them aren't created equal. But so you do have that access though, but it costs you a little bit more.
Okay, okay. I didn't know that. I know. Obviously, just heard. Did you think about maybe doing like an H&R Block or something like that, or you thought about doing something different?
I've been doing TurboTax forever.
Okay.
All right. There was another one I was doing like a like a tax something,
Hmm.
um, tax act maybe I don't know, but
Right.
I never used a CPA, but I always thought about is there some other discount or is there some other like things I could itemize or whatever that I'm just not paying attention to. I don't see, and
Okay.
it was always the fear of um, they're just going to cost way more than I'm willing to bargain.
Right.
You know what I mean? And
Hmm.
so, how do things get like as far as deducted? That's another thing too. Like, how do I know like if it's going to get if my refund going to get ate up or not?
As far as oh, you saying as far as oh, go ahead. Sorry.
Yeah, as far as anything, as far as I guess student loans or whatever. Like, so like if my refund gets ate up by student loans, where does that money go directly to the student loan or what's that go to? How's that work? Do you know anything about that?
No, I don't think so. I don't think it goes directly to the student loans. It's just it all like I said, it all depends on how much you paying during the year, how much is obviously withheld during the year, and that sort of deal. I don't think it's ate up through the student loans. Not that I'm aware of.
Why you laugh, Mo?
Mm.
Look, man, I know some people, man, that they considered that their student loan payment for the year once they went ahead. Like, that's not the way that works. But yeah, I can't answer that either. I don't know where it goes, but I know the IRS will come and they'll take that refund. But I don't think you can actually just say, okay, well, that's coming off the principal. I don't think that's the way that works.
Right. Right.
Yeah, I mean, I've been owing. I mean, we literally just stopped owing the IRS this year. They was taxing us every single goddamn year for the past 7, 8 years, man. We was getting hit hard. We just finally, um, we just finally got over that hump, and that's because I just got solar panels on my crib last year. I think I got it's 2022. Yeah, I just no, it's 2023. So I just got solar panels in 2021. So man,
With
the
the
solar
energy.
panels Yeah, that energy credit up here, man, it got me out of the hole because man, we was in every single year, man. They kept hitting us, and that's like I've been dealing with CPAs for like I don't know at least 20 years. So I had a CPA I was dealing with down in Florida, but then when I moved to Detroit, I was still using him to do the taxes up there, and then that's when I got audited the first time. It's because when I moved from Florida, I moved to Detroit, and then I had him doing the taxes still. When there was some kind of change or shift, boom, I got
Right.
audited, and then that put me in the hole. And then every year since then, it was like in the hole, in the hole, in the hole, and then audit after audit. It was crazy as heck. So
Was it
then
both like was it both federal and state, or was it just federal?
it was federal
Okay.
that I got the audited. Like here in Pennsylvania, man, we got the most outrageous taxes. It just doesn't make like we got like 17 taxes, it feels like, and it's crazy. But it's always mostly federal. Like I get hit on the state, but it's like the state ain't that bad. The federal, they be taxing. So I be getting hit, but we finally just got
Yeah.
out because I went solar. So that was a plus, but I'm hoping we don't revert back to the regular stuff this year. But we both had
That's
like
what.
1099 income, and we were still like we were trying to expense certain stuff, you know what I mean? Because we had our own
So
businesses and stuff, but we was getting hit.
so the only thing with like sometimes with like 1099s, if you get multiple of them, what they do is because like obviously you're considered like a self-employer. So the thing is, you always get hit with the self-employment tax. So it's what people don't like when if you have like a W-2, your employer pays part of the social whatever the FICA taxes, then you pay the other half in theory. So when you get a 1099, you get the credit, but you still got to pay tax on that, social security portion of it. So that's like almost like an add back tax on the end of your return. So you get your regular tax, and then they tax you again for being a self-employed person, because in theory you didn't pay in the employer portions of the, FICA taxes like the Medicare, Social Security tax. And that's what I was suggesting earlier. If you guys could pay in like estimate taxes, it could help you. It could probably help you out a lot, easier during the year. That way, at the end, you're not just sitting there like, "Dang, I gotta owe this much." Maybe you say like, "All right, if I put away this much now, hopefully at the end, my tax burden still isn't high."
Hey, I was gonna ask you about that, Leaford, with the solar panels, man. How's that necessarily work? Has it been beneficial to you, like as far as bringing your energy bill down and that kind of stuff?
So it was beneficial in bringing my taxes down. I'll say that for sure. That was that. But the only problem with that is you can only use the credit once. So it worked for what it needed to work for, got me out of the hole. Um, but like my roof is only so big, so I can only fit so many solar panels on it. It does cut my electricity down. Um, a lot, my electricity bill down a lot during the summer, but I still usually have a bill. It's usually a smaller bill, but it's usually a bill. In the wintertime, it's like doesn't it doesn't really cut much off. And then you still on top of that, you got to pay for the panels. So you're paying a monthly payment for the panels, and you know what I mean? You might get a reduction. I mean, you live down south, so you might have a little more sunshiny days than we do. It's doom and gloom up here in Pittsburgh. So you know what I mean? We got maybe like a 2-month threshold of some sunlight that I might get some benefit on it. But definitely down there, like I was telling Lynn and them down in Florida, like, yo, y'all would benefit a lot, you know what I mean, from some solar panels. Like I don't know what if the tax laws and stuff or tax credits are the same down there, but I mean, it was definitely beneficial for our situation, if only just for that one tax to get me out of that hole. You know what I mean? It's still beneficial. And if I
So
decide
do
to
they set up like
sell
a
my
bunch of
house,
capacitors or something like that, like to kind of store the power, or you know what I mean? Does How's the power generated, like as far as how much sunlight comes in and how long does that last?
well, so there's like this big system that's outside, and then I pay extra for it, but I also got a backup battery in the basement. So all that energy that is generated is stored in the battery. So if I have a power outage or something, the battery will run the power in certain parts of my house and keep me going. But they got this big old system that's like they put it outside next to your electric box outside, and you know what I mean. All the energy that's generated flows right through that box, and then it's connected to the battery if you get the battery.
So hit me. Here's a boxing gym, right? So like, is there any tax benefits to having like memberships or anything like that?
Yeah, so for gyms, obviously like the rent you pay, the memberships, the different equipment you would use as far as like, obviously the gloves, the bags, all that good stuff. Um, do you travel to see like clients, or do they just all come to your gym?
So just for the record, I intentionally sat here quiet. I almost thought about putting a mask on because you guys start talking about artists, man. I'm
I'm
terrified. So.
The
Yeah,
S.
I was really sitting there like this. You know what I'm saying? I didn't really want to say much. I didn't want to raise no suspicion. It's just in case somebody was watching this. I pay my taxes. I file. I just want to make sure it's known. But yeah, I travel. So I actually when I bought my truck, I actually wrote part of that off, like you were saying, because of the travel that I had to do. And eventually, I want to go ahead and like take like kids to camps,
Right.
or like take them to like fights and different things. So
And you could definitely write that off because that's still traveling as part of like, you'd say like, all right, I'm taking kids to, like you said, the events. That's still part of the travel as far as your business because you're on company time doing that stuff. So yeah.
Hey Phil, wasn't
Do
you
you
getting some
have?
type of black belt or something?
No, I was just training. I wasn't. I was just training. I was done. I was just training. I wasn't doing that for real though.
I thought you was about to get in the ring. I didn't mean to interrupt you. I
No,
was just like, you
no,
you be fighting though.
no. It's crazy. Is there's like two dudes I played football with at college at Hofstra. One was in the UFC. The other did like small fights. They both did that stuff, and after seeing them do it, I was like, yeah, I'm not doing that. I'm just gonna watch from the side. I'll train, but I ain't watching that. I seen some serious fights one time where I was like, nah, I'm not about that life. I'm not doing that. Nah. I want to
hey,
get home. I want to get home in one piece.
Hey,
hey
hey,
Philip,
Vic, remember that one we went to? And we went to what, man? Hey, yo, my man just started working that accent.
Yep.
Hey, yo, couldn't even speak no English. All he said at the end was "God bless America." I said, "Woo, got to be a better way to make a living."
I seen one dude taunt his opponent, put his hands down. He got knocked out so bad, his mouthpiece came out. You heard the hit throughout the whole arena. I was like, "Yep, that's it. I'm leaving. I'm leaving."
But
hey, hey,
go ahead.
hey Philip. Let me ask you about. So I have an older home, and I'm doing a lot of home repairs.
Hmm.
Um, is there a way that I can write off some of the home repairs? Like, is that a write offable thing, or how does that work?
Unfortunately, like some of the some of the repairs aren't, but like I can't remember your friend's name, but definitely
Get you
if you
some
could do
windows.
yeah, if you could do like any energy improvements that could help you during the year, that'll help. Like your man was saying with the solar panels, that'll help. The thing with I think Mo Better could, correct me if I'm wrong, but any improvements you make during the year, any time of your house, it always adds. It's obviously going to add value to your, to your house when you sell it. So even though you may not get the tax benefit now, at least it'll add value to it once you sell the house because you'll be able to write that off then, or not write off. It'll increase the value then.
Yeah, he's right. But even from a tax standpoint, new windows, weatherizing your house, a tankless water heater. So there's a couple things out there, trying to making your house a smart home, the costs associated with that. So
Yeah.
those are some of those things that you could write off.
Yeah.
So I thought that went away with the Obama regime. That credit when you got for like you said, winterizing and windows. I think that didn't that go away?
No, it's still there. The
No, that's
renewable
still
energy
there.
is still
Yeah,
there. It's still there. It's still there.
yeah.
Yeah.
And
Oh
as well as
yes.
a homestead exemption, you get that. You get one bite at that apple as well.
Mm-hmm.
What's that? What's the homestead exemption? What is that?
It's kind of like what Leifer was talking about with, you kind of get one bite at it. Like once you go ahead and buy a house for the first time, or I won't say the first time, but once you buy a house, you get the credit of, I don't know if it's like the tax associated with on your mortgage, but there's a certain portion of that there's actually you can write off and you get that exemption, but you only get one crack at it per home.
So you can write that off.
I know what you're talking about. You're talking about the principal residence. You could get like
the homestead. I think I'm assuming that's federal, right? The homestead.
Yeah,
I know that's definitely here in Georgia.
Was it the 250 or the 500 if you're married?
Yeah. Yep.
Oh yeah. So if you so how that works is if you own a home and you go to sell it, you have to within 5 years, if you fully own that home for 5 years, like he was saying, you could write off you could get the full credit of the 250 if you're single, 500 if you're married. However, if you sell it less than that, then you get a certain percentage of that. You want to keep it between the 3 to 5. If you could keep, it's weird is you could keep buying and selling homes within that 5-year period and keep still getting that exemption.
Yeah, because that goes into capital gains as long as you're not like taking money out of that transaction and doing it for something outside of real estate. That's where you got to get into capital gains and you got to start paying taxes on that money.
Yeah.
So there's just no taxes. There's no tax breaks for renters, huh? They just got to eat it.
No, there could be. It just depends on you just depends on when you sell that home. Like I said, if you stay within that 3 to 5 year range.
No, I said for renters, people who
for renters.
Rent.
Oh, my bad. My bad. Yeah, nah. There's really no advantage other than like you buy rent insurance. There's really no advantage.
So that's it. You can write off your renter's insurance.
Yeah, but it depends. I mean, what's weird is you could be like, all right, not that you would do this. You could do like, I mean, if you rent, you could say, all right, even though I rent in this apartment, I have my little home office set up. And if I get like 1099s or something like that, I could say like, all right, I have my little small office at home. I'm subcontracted to do certain types of work. This is my little office in the square feet of area. I should be able to take a portion of this rent off of my, off of my income.
So Phil, that's a great point because that's something I used to hit them with a lot. But can you still do that? Like with the standard deduction being so high now, I can never get to that because literally I was actually able to take a fourth of my house,
right? Like a square footage. So if you do, do you do like a Schedule C or anything like that or no?
No.
Yeah. See, if you do like, maybe try to do like a Schedule C and say, all right, this is my like, I want to say like hobby, but this is like my business. This is what I do. Mm-hmm. So this is like the income, obviously the expenses I have, and just like I was saying, just have that little office set up, and obviously have not blueprints, but have like proof, obviously saying, all right, this is like the square footage of where I use for my house, and then you can say like, all right, you could deduct some of maybe the real estate taxes or mortgage interest off of it. You just have to do like an allocation of it.
Yeah, so for example, I guess that's exactly what I used to do. So I built my house. So I actually had the blueprints, like you said, and I was able to kind of go through the floor plan, and I was actually to take the total square footage, and then I was able to take the percentage or the pro rata share of whatever that office space was. And I had a certain percentage, like 25% of the time in my actual career, I worked from home. So I was able to kind of use all that. But once the standard deduction went so high, that went out the window.
When did the standard deduction like change and get so high? When did that happen?
So
was that Trump?
That was about to say it was Trump. It was basically, I understand from how I was explained to it. I mean, it was a method of the madness to it. So how it used to be was because standard deductions were never that high. So obviously you got, say if it would have used to be for years, say it was like barely, I don't know, I'm just making up. So it was like 10,000. You used to get like personal exemptions. Like every year, someone would get an exemption for being alive, like a qualified person. Then like you would get exemptions for having kids and like having, all the, like if you were blind or if you're old, you would get different exemptions. I think what Trump did was he wanted to add all that back together just so that people weren't making up exemptions throughout the years, saying that people couldn't claim maybe more kids than what they were entitled to, or people couldn't claim like certain, I guess maybe certain deductions that they weren't really shouldn't have been entitled to. I mean, it really, truly, I still don't know why they really raised it, but because it limited what people could take as far as what they can itemize. Like I said earlier, with the whole like property tax, like property taxes in certain states being so high, people used to rely on that little exemption because that helped out a lot. But now being that it's capped at 10 grand, the real estate tax thing doesn't help anymore.
So, so I'm thinking of a way, right? How do you get to that 15-30,000? You know
Right.
what I'm saying?
It's
It's
almost it's almost like you would have to like pay a lot. I mean, for me, it was always if I was in that position, it'd be like you will have to pay a lot in like mortgage interest or like medical expenses. I mean, you would have to have
Student
weird like
loans.
that's you can still get the credit though. That doesn't really affect the itemized
itemized.
deduction. Yeah, that won't affect the itemized portion of it. And the thing with student loans sometimes is you want to be careful because if you make over, I think it's like 80 to 100, it starts to phase out. So if you make, I believe, I could be wrong, but if it's between 75 or 80, the amount you paid in student loan interest during the year starts to phase out. So you may, even though you make more, you may not be able to be entitled to that full, you know, write off of the student loan interest.
So,
Yeah, and
so the more you make, paying back the student loans is like whatever.
I've seen it with like the doctors and some of the like cardiologists. I've seen it like years ago where they would go to these top medical schools. They can make like six figures. They still can't, pay a lot of student loans, still can't get that deduction because their income is so high.
Mm,
And I'm not I mean I would imagine they're paying a hefty penny for what they're paying off in loans, but you know, they can't
doesn't
even
matter.
doesn't matter, can't even get the benefit of that.
They're coming for you.
Yeah. They're like, all right, yeah, that's good. We still need more money.
Dang. But anybody got any other questions y'all want to ask Phil or?
Phil, so for me, man, it's always about like prevention and like I said, don't be like Mo. So what are some things not to do when it comes to taxes?
Um, I would say like, don't be late with your taxes, obviously. Um, if you ever did get audited, just always speak to a professional or maybe speak to an IRS agent, see what your options are. I mean, not even speak with the IRS agent, maybe just speak with an accountant because there might be certain things that they may not be able to tell you that a regular like professional accountant can tell you. Um, like I always said, like look for ways to get better deductions. Always look to see how you can, especially through your guys' businesses or whatever, see how you can contribute to like a pension plan or whatnot that can help reduce your income a lot. Um, look into, like I said earlier, maybe paying some estimate taxes during the year. Just always, if you can always put away a little bit for both federal and state, just put away some money towards that tax balance during the year. It can help out towards the end. Um, always look to see like maybe, whatever, businesses you're doing or whatever you have going on, see what type of, purchases you can make during the year that can always, lower your tax costs at the end.
If you get audited,
Hmm.
right? Let's say you owe. I guess the magic number is 30,000, right?
Hmm.
Is this something? Do you got to pay it? Like, how long do you got to pay it? Is it like pay all in lump sum, or do they make payment plans, or how's that work?
So that's a good question. So, if you did owe 30 grand, by like April 15th or whatever, there is I forget, you would have to call like a hotline. The name of the hotline slips my mind right now. But if you call them and say, hey, look, I can't pay this full balance with my tax bill. It's a lot. Don't charge me interest or nothing. If I set up a payment plan with you, however it is, whatever the terms is you set up with the IRS, they should be able to do that. And I think it's over the course of either that year or whatever you set up with them, they'll allow you to pay off that balance. Like you don't have to always pay it all at once. But if you talk to them about like the April 15th deadline to say, hey, look, there's no way I'm going to be able to pay this balance. Can you please help me out? I could always, tell you afterwards what the hotline is. I just can't think of it right now.
I know one thing. Oh, let me get close to my mic. I know one thing in Pennsylvania, uh, like I said, because I've been owing for the past almost 10 years. I've been having payment plans on all the stuff that I owe. However, federally, that is, state stuff, they want their money today. So the moment they find out, like the moment you file your stuff, like, cause I'll be at my CPA, the moment you file and they press that send and they see that you owe, the state see that you owe money, you gotta pay that money like right now. So they ain't taking the state ain't taking no payment plans. They coming for your pockets right now. Federal, you could do your payment plans and you can, pay that off and whatever arrangements you set up with the federal. But here the state, they want their money now. Write that check.
Yeah, I would say I'm not sure about the PA laws too much because like you were saying earlier, I know PA's got some weird laws. I can't remember if you could do that in New York or not. I'm not 100% sure. Probably it might be the same thing, but I'm not honestly 100% sure.
Well, we're a Commonwealth, so I'm not sure what New York is. I know we're a Commonwealth, so us, I think Virginia and maybe another state or something is like Commonwealth states, and the laws, the tax laws and stuff is a little bit crazier. So I'm not sure what it is in New York though.
But I would definitely say like I was saying earlier, like I believe estimate taxes would definitely help you out a lot, like during the year. I mean, if you're able to have the money, if you're able to put it away, even if you paid like say whatever 1,000, you save 1,000 federally, 500 to PA taxes each like every 3 months. That might a little bit is always going to help your tax bill at the end.
So don't be afraid to get that CPA, huh? That's what I get from this conversation. Go ahead and get the CPA.
Yeah. Well, what I'll say about the CPA though,
I got a sister-in-law.
Like I had to fire a couple CPAs. I had to fire a couple CPAs because the first one that I had that I was with him for years, when I end up getting audited, he start ghosting me. He act like just answer all the questions. And I'm like, well, why didn't you prevent me from getting to this space? Like, why am I here right now? We had this conversation. So I ended up letting him go. And then when I moved to PA, we ended up dealing with this, this firm here on the north side. And then we end up going through the same type of thing. Like after, like every year we were owing. I'm like, what the heck is going on? And then like after 4 years of going to them, we owe, but then we end up getting audited. And then was like, well, what the heck is going on? So we end up dealing with this tax attorney that ended up doing our stuff. And he went through like years back that they were doing. He was like, man, they didn't check for this. They didn't do this. They didn't do that. Blah, 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 blah. And I'm like, you know what I mean? So you got to even be careful with CPAs because they only doing what you're paying them to do. Like they got that hourly rate that they charging to do your taxes. And they ain't necessarily checking for you on anything that you didn't do. So you got to make sure you know the right questions to ask and when you're dealing with them because all they dealing with is the information that you came to their shop with. Whatever you got.
What's the right questions? What are the right questions?
I was about to say too, like you ask them if you could fill out. I don't know if all firms do this, but like it helps to ask if like to say, all right, do you guys have like a questionnaire that I could fill out to say, all right. Usually they might have like some firms send out questionnaires to clients, and not all clients fill out these questionnaires, but they should. Because it has like every question available that can help, accountants say like, all right, we're someone may not know you purchased a new house during a year, but they might think that if you come in with a packet of information, they're gonna think, oh, this is all they have. But like, if you when you come in to meet with them, if they don't make you fill out a questionnaire, definitely just say like, all right, let me run this past you. Does this help? Does this help? Like how we're discussing now. Like always run like a ton of questions past them. If they don't help you do that, then I don't know. Was it the person you went to? Were they small? Were they big? Or
I mean, I don't
like,
know.
do they have?
Like they seem like they were decent size. Like they dealt with businesses of all different sizes. You know, I got referred to them by somebody I knew who, and they did their taxes for years. But you know what I mean. The problem that I just had was just like, and they did send out a questionnaire. Like they all every year they would send us a
Yeah,
packet of
I would.
things
I
to
would. If
things that you would
I
have
would.
to prepare for.
I would definitely recommend just going through that and just say like, all right, because it could have information in there. They would be like, all right, based off of last year, you had this income, you had this income from this, you had these, you had this and that. Do you have the same thing? You know what changed? And I know that shit's like long because it's be them thick, big booklets, but those things really do help. In my opinion, they do help.
No, I don't say they make a great point. For me, I was taking those questionnaires and I was doing those types of things and I was trying to outsmart them.
Yeah,
Tell the truth and tell them the exact picture of what it is. Because, like I said, it was working for years the way I was going about it. And it wasn't until I got audited. And I mean, it was something that I missed. And to you guys' point, to Phil and Leifer's point, I didn't actually realize this. Like, so not only did they say was it due now, they said for every day that it wasn't paid since I guess like January 1st of that year, because they audited me for 2 years. I
right.
got a penalty and they taxed it.
Did you
So that's how I ended up with 20 grand. And like the payment plan, it didn't make sense to do. So I cut them a check for 20 grand so I didn't have to pay additional fees and taxes.
Did you were you able to like get the penalties abated at least or no?
Only for 1 year. The other
Only
year
for 1 year? Oh,
they
okay.
yep, they wouldn't let me.
Okay, yeah. I was gonna say hopefully yeah, because they're at least like they'll never like waive the interest on it. They'll never do that.
Right.
But they can at least like say like, look, if you abate the penalties, I can at least do this. But it sucks too.
Right. And you
That's
can imagine the conversation I had to have with my fiance. She's like, I told you don't do this. You were trying to be smart. You try to, navigate the system and try to circumvent the. So look,
hmm
don't play around with it. The same thing with your W-2s. If you have a W-2 at your job, make sure you're paying what you're supposed to pay. Make sure you have the right deductions. Make sure you have the right dependents and stuff like that.
Right.
And if you are trying to play that game of, I'll go exempt for, 2 months out of the year, remember to put it back on. Don't be like Mo and forget. And the whole year you got it exempt, and then now you got to cut this big check at the end of the year. It's just not worth it. And for me, man, my goal is always to be. I want to break even at the end of the year. Look, we can just at the end of every year. I don't owe you anything. They don't owe me anything, and we fight again the next year. That's
Right.
my goal.
Do they ever give you everything they owe you?
What do you mean?
So whatever your refund is that really the over like, or do they like not give you everything?
Yeah, if anything,
percent?
your refund. Correct me if I'm wrong, Phil. I mean, I think your refund is just essentially everything you overpaid in taxes, right?
Right.
Correct. Yeah. hmm
So I try not to overpay.
What I'm asking is, if you overpay, do they really ever give you everything you overpaid?
Oh, they have
Yeah, I
to.
believe
Yeah,
so.
they have to.
Yeah, I
Yeah, they
believe
have
so.
to. They have to. Yeah.
I mean, that's the thing that like I've heard that like they're never going to give you everything everywhere. Like you know what I'm saying? You hear
That's
you hear little weird stuff like you know what I mean? Like don't eat the watermelon rind. Like you know what I mean? You hear stuff like that.
the only thing I would say is like, say if like say if you didn't file your return, right? And it was like from like say 5 years ago, like you haven't filed for 5 straight years, and each of those 5 years you were due a refund. Now the government says, well, technically you had 3 years to claim this refund, even though you had refunds for 5 straight years. They're not gonna give you a refund for those those 2 earlier years, only for the recent 3 years. The thing you just gotta watch too is if you haven't filed, if you owe balances from years prior, they're coming after you. I mean, they're always gonna, like you were saying earlier, they're always gonna want their money. So that's that's why I always say, like, if you can, be diligent as best as possible to file on time. If not file on time, definitely file each year.
Don't wait it out.
Yeah, don't wait it out because you know, and you don't want that burden ever. You don't want that burden on you Because then too, they can, you don't want them to start like garnishing wages. I don't think they could go after credit. I mean, I could be wrong. I don't know, but you definitely don't want them to garnish your wages or your accounts or something like that. So
Yeah.
Now you can file an extension, right? If you run a little bit behind on some stuff, you can file an extension to get a
you
little
could.
more time.
So the thing is, you can always file an extension, but the thing is, you should always still, if you feel like you're going to owe, you still want to make a payment with that. Because even though you might say, all right, I filed an extension, yeah, it technically wasn't late, but you still want to at least add a payment to that just in case. Because if you say if like by like if you filed an extension in April, say by like September you filed and you still owe a balance, they're gonna still hit you for penalties and interest, mainly interest from April 15th of the balance that would have been owed. So just always be wary of that. If you could like pay something, if you feel like you have to pay with your extension, I would say you definitely want to do that.
That's legit.
Yeah.
Well, y'all know I only like to keep y'all for an hour. That's normally the spell. Sometimes we go over, and Phil, I appreciate you taking the time. I know, it's about to be the start of your busy season. You up there hustling, bustling, and you live that New York life. So
Yeah, man. And like I said, if y'all got questions, man, then I could, just hit me up on the side. I could definitely try to help y'all as best as I can.
appreciate that. Appreciate the olive branch, man. And
Yeah, man.
hey, that's another week of Prototype Dad, man. Anybody got anything to kind of finish out with? And straight like that. All right, y'all.
All right, fellas. Thanks, man. Thanks for having
Thanks,
me, man.
Phil.
Appreciate it, man.
Absolutely.
And like I said, you could Kev, you could definitely give them the links or whatever, and I'm always around during the year, so I definitely will help out as best as I can.
Appreciate you, man.
All right, fellas. Have a good night.
We out.